Good evening. Actually, good morning. I wish I had some live, funky music to get us started off with, but I don't. I don't have the time for all of that stuff. No graphical content. This is what you're gonna see: a screen and probably hear me talking. Okay, so this is something that you could probably minimize and keep in the background, unless you really like looking at the charts. Follow me at Math as Sheep on Twitter. Top left of the disclaimer. And this is pretty much any content that you get is my opinion. Just like you in some fashion. Meaning I am a retail trader. I'm probably sure Big Money is not listening to me or watching me. Okay. And yeah, I'm not here to solicit anything. I'm not trying to sell you nothing. I'm not asking for a penny. If you're interested, all I want is for your time. That's pretty much it. You're going to see this on YouTube, so you're going to have an ad there. Pay me with a thumbs up. Even if you don't like it, send me a comment that says I don't like it. Let's go to this disclaimer. Investing and trading in the financial markets impose substantial risk to where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Let's get started. All right, this video is strictly going to be about the E-minis, S&P 500, using the future index. All right, I usually don't use the cash index or SPY or anything like that. Only time I use those indexes or those instruments is when I'm looking for a gap that was listed on the cash index, and that's pretty much it. Besides that, I use the futures market, and that is all. The reason why I use the futures market is because this is used as a vehicle as the here and now, right? The way I see the investment world is you have a bunch of instruments that you can pretty much in any sense, you can take a bunch of positions and find some way to get net flat. Meaning that you can pretty much have a non-directional bias in the market. And as you see fit, you can, at times, go to the other side of the delta extreme, meaning whether you're going to go negative or positive. All right, so meaning I can indefinitely stay long stocks, a select basket of my choosing, whatever it may be, whatever it is that you like. Yet I can use the futures market to hedge a position, or if I'm really seeking alpha, I can go leverage to that bias, whether it be short, long, right? But meaning that the futures market is the here and now with the added premium of paying the commissions, the roll fees, to fuel that, whereas the indexes, the equities, the ETFs, the ETNs, stocks, whatever it is, it's sort of like a one-time charge, and you collect dividends at the same time in certain cases, right? So it's usually within the stock world you notice big money assuming these positions in equities and using the futures market as a hedging tool in some form or manner. So the reason why, again, I use the futures market is because you can determine the immediate bias in the market. right? Meaning if it's for the next 15 minutes, the next few hours, days, weeks, so on and so forth. And how do you determine that? I see the futures as a forward leading indicator, right? Not a lagging, such as a moving average. Um, but again, this video is going to be strictly focused on the E-mini, and pretty much it's going to start now. The rest is just rant. All right, let's get right into it. Okay. What a sloppy mess this last 6 months and 7 months has been now. All right, we've been pretty much net flat. All right, throughout the whole year. All right, we had a nice range in between, but buying highs or selling lows has worked out zero. You're on the bench right now with trying to do those trades. All right, so pretty much it comes to knowing when to get out and knowing when to get in. All right. If you don't know where we're at now, I'm not going to go into the history. Use other videos for that. And pretty much we're going to work off these 62 lows. Really wish this screen was there you go, so we can get rid of that. All right, from these 62 lows, we're going to snap a fib, low to highs. So from the 62s onto the 22s, okay? This gives you your major support, at least for this leg. And with support level broken under the 85 evens. All right. If you want to be conservative, you could say 84.75. All right. We never had this level traded. If you remember, we was looking for 92s to trade. That was front run by whatever that is. All right. So we drew up another support level. This is the main one. I don't see nothing wrong with this until this breaks. Right? Or at least at minimum, my bias does not change until this breaks. So, from this crap down, finding support from these lows, we're not going to be exact, we're going to be just about, to these highs, to the 22s again. We broke that today, which was a 6.5, right? If you notice the participation, we did have participation, the bounce, it was holding it, went right to the tick, and pretty much at 12:30, we broke. Lunchtime. Okay, now that we broke, we also had just real quick, we also had this tighter line in the sand that since we went straight up, I'm not sure if you remember this day, but we had one move. How did we get that move? It's been a while. I forgot this move already, but something had to happen here to where we had one measured move. See if we can figure this out real quick. All right, now that we had broke that move, there was only one other way to draw it, and that was pretty much a series of measured moves straight up. And that was measured from, you had 1, 2, and if this one was to hold, it would be 3. And if you notice, if you drew it this way, again, you're still using this same anchor, low to highs, and this one broke. We broke pretty much the same area. And if you notice, what are we running up into? What are we running up into? 20-year weekly chart. You just don't see the other fib lines, but pretty much is measured from, and if you really need to see it, that's pretty much what you're seeing, this drawing. So let's just hide this one completely. You don't need to see that one no more. All right, so going back to this chart, once we had broke that, did I just draw all of these? Yeah, I did. Let's get rid of them. And this is what your chart becomes. You know, you have all these different lines, and it starts to look retarded. You know, you have all these different measurements. But pretty much this is what it is. I keep track of what's most important, what held, and it's like keeping a journal of every single anchor that trade. This is why you start to forget numbers, and the numbers just start all looking the same. All right, so we trade this one from the low to high. We broke this one again. Whichever way you had drew it, we broke. So noticing we're coming up to a very important one. All right, and this is going to decide the fate of this market yet again. All right, remains to be seen if we go up or if we start making new lows. All right, you have to go up. This goes to that old adage of trading what's in front of you, or trading what you see and not what you expect it to do. This is what it is. This is trading what you see, what the chart gives you on a day-to-day basis. So who am I to say this is going to break? I don't know tomorrow if this is going to come down here, trade and hold, trap a bunch of sellers at low ticks and go up to the next target, 2136. Who am I to say that that's not going to happen? I'm going to give this market all of the space it needs and deserves, because everybody who had sold low ticks have been getting crushed. You've been getting crushed. I myself got crushed here on this leg right here, because I'm over here selling 91s, selling 93s, getting stopped, selling 10s, getting stopped. I sold ones. It was all ones. I think that was the move. I'll tell you right now what I was selling. Ain't no lying to what I was selling or not. I forgot where I got my number from. I forgot what it was, but it was I remember it being ones, 2101s, and pretty much I soaked up ones. Right when the ES was at ones, I just started shorting the NASDAQ and the Russell. Believe me, I took a pounding. So it's not to say I don't take losses. There are losses, all right, and you know what the losses are. I'm saying I'm not just going to short here and 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 here. No, it's calculated. Everything is calculated, right? And once it breaks, you just got to eat it. Until you get another setup, you just have to eat it. You have to take, again, what the market gives you, right? And I remember this a few days ago, and we had lines in the sand going down. I forgot exactly what it was. This looked about right. Yeah, that was about right. 73s, right? 73s broke. What was the likelihood we would trade up? And I said I was not involved. I didn't take the long. I have not been involved on the long side for a few months. I'll respect that. You'll see it when it comes into the opposing trade, right? Or when the short breaks, right? You'll know when it happens. You know what I mean? You're gonna hold that short all the way up? No, I trimmed. You had to, right? So it gave me the luxury of trying here and trying there, right? And believe me, my first shot, because I honestly thought that, again, like always, that was the time it was gonna roll over, and yeah, I thought so. I oversized, and yeah, I took a pounding. Here, I got up here, and I started with a half size, only because I threw around all around shorts, and I didn't want to get crushed, and still I got crushed. It is what it is. This is the risk, and if you're playing this game, you better understand that you're going to take a pound in here and there. Right. All right. Enough of that. So where are we now? I forgot where I was talking about. Okay, yeah, that's it. This is the setup right now. All right. We're gonna see if we find buyers at this level. All right. What you want to see, if you have hopes on this market going higher, you want to see this level trade, meaning that it will be bullish, absolutely bullish. If 92s trade, 91 half, 90s dig in, start to rally, come back in one more time on a test, get some shorts really powered up and squeeze them up. That would be bullish. You break, you pierce, you trade underneath that. Same old sloppy choppiness. However, respect that shorts have it in the ball, in the court. All right. All right. Just respect it. The same way I respect when levels break to the upside, you respect it. Right? You got to live to trade another day. So take your small losses, suck it up, and find another one. So right now, the idea is to pretty much, and mind you, I should show you, this is live. Let's get this zoomed in. We are still holding. Right? For you don't believe that these fibs ain't the ideal tool, this is the closest you're going to get to your holy grail. This is the closest you are going to get to finding the holy grail. This is respecting right now. This short holds. 2096 is next. 2097. Breaks up above. Where are we going? From 22s to lows. Simple. We're going to go up to these 10 halves. And you better believe I have sitting orders here from 10 halves to 12 halves and even 13 evens. And you slap a stop right at 13 halves. That's it. That's as simple as it gets. All right. What you want to see when we get up there, see if I have it. All right. Pretty much what you want to see. You want to see a high tick associated with it at minimum plus 400. You really want to see plus 1,000. Anything over 1,000, just short it. You got send out market shorts on that. I wouldn't short the first high tick, like meaning that if you get a plus 1,000, the next tick, if it's higher, don't short that one either. If you get the third one, fourth, whichever one, basically you want to see a plus 1,000, and then the next high tick, lesser, meaning you want to see it less than 1,000 or whatever, less than whatever the first one is. That second high tick, short it, market it, and this is the closest. I'll probably do a separate video with trading advice of what I've learned, and of how I pretty much I will take a position. I mean, I'll send out what the number I like to use. I like to use 16s. So I'll sell 16 right there. Just sell them. All right. I'll have them stacked up. Meaning I'll take 8, take 4, and then take another 4. All right. Soon as we're pulling back in, I already covered 4. All right. So say if I sold 13s, I sold 13. If I sold the bid, sold 13. I'm already out on 4 of them at 10s, and then another 4, maybe 2, 3 ticks down from there. So right there, you just locked in that risk reward, meaning that if you get stopped out, you got paid still. Right? So then you hold on to 8 and you ride that down to profit target. And what you'll probably do, because you don't know if you're going to keep waterfalling, you'll book about 3/4 of that, and you still have 2 as a runner. So just little small little things that you can do to either make your trade risk free or you reduce the risk somehow. You got to do it. I mean, either that or you're a sitting duck, meaning that it's pretty much all in, all out, or hit and miss type of trading. And I mean it works. Don't get me wrong. There's nothing wrong with that. But sometimes you get all this chop to where I'll take 16 into that and I'll start booking some, and then if it gives me another one, I'll take it again and just keep playing that range until it starts breaking. And then if you really want to get aggressive, say if it was like another setup into it, after you already had took some off, once it starts bouncing, just double or nothing with a tighter stop. As soon as you come back in, book all of that, and just keep doing the same thing until you get to your profit target and you book the majority. If you don't get into the habit of booking targets, at minimum taking half off, at minimum half. I mean, do the math. And what I can really recommend is getting a journal or writing it down, and you will start to see that how much you increase your statistical advantage on that trade if you at minimum take half off on a trade. All right, this is where you'll start bleeding, and if you start doing that, give yourself a month, and especially if you're dedicated and you really obey your rules, give it a month. You will increase your size by 2 or 3-fold, and that's conservative, right? Again, that's the bullish case. If we trade down into these levels, find support, don't dip in, all right, then we can make our way up to these 36s, all right? Right now, the extension hasn't broke. This extension, if you ain't catch it, it's drawn from these lows on down to these lows, and gives you your line in the sand at the 0475, and targets below. All right, and what this is probably doing is we're probably just gonna splash down into it. Who knows? It may just gap down tomorrow and either trade it, break it, or another thing to look out for is pretty much you see how this. Let's get rid of this one. See how this target is over here? We can just pretty much just take the ride on down and not trade this level at all, and then set up for the next run back from there up, come down again. We can just do this all day. All right, so until we either trade or break it. All right, it's something to think about. Like I said, this is what opens up the door to anything. All right. Again, my opinion, it's not something that I don't trade an opinion. I trade what's in front of me. But my opinion is still stands. From I told you this well before May. All right, I told you to sell in May and go away because I thought this was it, it's been happening. You had clues all year. All year you had clues that this is what's happening. You've been breaking setups. As a matter of fact, let me show you the chart that shows this because I have all the lines on it. All right. It's a daily chart. It's continuous on the SEP contract, and it's that same target. All right. Drawn from these October lows. All right. Until these December highs. All right. That gives you. Let's try to see if we can what you call it. Let's just click on it. That's text. Excuse me. All right. Do you see the one that hit it up? We still have a target up above at the 41s, but the thing is that that level never traded. The 47s, that never traded. After we traded the 79s, 47 never traded. All right. So let's just hide this. No. Can I undo that? I'll fix that. I'm just trying to hide it right now so you don't see it. There you go. I'm still learning this, so forgive me. That's why I'll still use Thinkorswim. I mean, I like it only because Thinkorswim is dark. This platform doesn't look too good when it's dark. I like it just for order management and their charts are clean. The data feed is uncompete. You can't compete with this data feed. All right. There's a lot of other good products out there, but this is top notch. Anyways, I like Thinkorswim because of the dark background, and I just know how to use it. Since being a retail trader, that's TD Ameritrade, who doesn't have an account? Down from this gap, right? You can only I only know this level is because I witnessed it. The only way you know of these levels, and these levels are ingrained with me, only because so over here I was selling this, and just look back into my Twitter, and you'll see when I had gotten I was the same thing I'm doing over here, giving you line in the sand. I was doing that down here. All right, so pretty much we had levels that this candle broke. Let's see if we can just get into it a little bit. I gotta get a better. I'm stuck in a stone age over here. Okay, why is that doing that to me? Crosshair. Much better. All right, can you see that? All right. From this anchor, I think we broke right here. We was running extensions like usual, and we broke here, and we just had a bunch of measurable shorts down. Okay. And went from here. Then we just went into extensions. So we went from lows down to here. Gave you another short, and then this was your line in the sand here. Once this candle broke, right, pretty much what happened that next day, Actually, this candle broke, but from this day right here, I remember this candle gapped up slightly. It wasn't much, but it did gap up. There's the only reason why I remember this area so much. This was these days were pretty hectic when this happened, and this day as well actually was the most volatile one right here. Um, but pretty much we had gaps, so I had drew only because we needed an entry into this day after it had broke, so we was trying to draw from so many different ways on the micro time frames. I'm talking about the 512 tick time frames to two. I forgot which number we was using before, but two frame. We was trying to find which angle to draw from, on because we want if this broke, obviously we had to get in. This went two profit targets at 18.19. This contract shows a little funny. Yeah, I guess with all the rolls or whatnot, but this went to two profit 18.19, dipped a few ticks in, and pretty much from there we just had a V shape. But you had to draw from the bottom of this gap on that day, and from there you had one measured move, like always, one. As you can see it from the bottom to the high of that candle, that was your first measured move that next day. And then from there you went up straight up in extensions as usual. From low to high, had another one, and then we just had a measure move and straight up. Straight up. This is how simple it gets. All right, so from that low, this is the reason why I draw from here. So I just want to make that clear. This is the reason why certain anchors that you have to know where to draw from. You know, a lot of people, don't get me. I posted a video on YouTube. It was from somebody else's channel. I'm not affiliated, but it's the same concept. They're using the fibs. They don't show you how to get the profit target. You know, they leave that blank. They show you the 0, the 100, the 50, 618, but they don't show you what's the profit target anchor. So they're selling you a service in some way. You know, be blessed that you have people like me, and there are people out here that just share. They freely share, no string attached. I don't have no hidden agenda. I'm just sharing information because information is free. And again, I don't have a service or nothing to sell you. All right, just do the same for others. And I'm trying to show you, or at least pass on that you can do the same thing too. You can make bank out here. Where the hard work comes into is your confidence to find these anchors, to lay out a trade because this is your money on the line, and just going from there to really have dedication. Meaning this is what I do at night, or whenever I have the time. I look for these kind of things, for these aha setups, and so this is my passion. Right, this is how I work hard to find these setups, and then I just blast them out there. You have to. You sort of have to have. You know, it's the same. Think of it in a relationship to driving. Right, you get on the road, you start driving. Right, you know, you may have a little. How can you say? Maybe slightly scared or hesitant to drive. You know, you're fearful what other drivers may or may not do. But then at the same time, you have to have sort of like a blind faith that other drivers will do the same thing. All right, so this is what it pretty much comes down to. You have to just lay them out, and you have to do the work at the same time. So, anyways, you know, a lot of people, let's just say, in life, and especially on Twitter, you hear them complain about high frequency trading and the unfairness in the world. Well, it's out there for you to learn. All right, that this is computer language. All right, so if you're willing to learn, the information is out there. But if you ignore it, if you blindly ignore it, then just accept for looking like a sheep, plain and simple, a sheep. And don't blame, don't point the finger or blame the games. All right, let's get back into it. Freaking ranting. Remember that level that I hit in? That one didn't trade, that had targets at the 41? Well, this one traded from this gap to this high. This level traded perfectly on the 16th of December, 2014. All right. So from there, we chopped around, chopped around, chopped around. And mind you, where the targets is at, can you see the one that just highlighted right here? I even make it, I even change the color for you. We change the green line to a pink line, so you can see it. There you go. Now you see the pink line. All right. That target is, what do you know? Does that look familiar? 2131. 2131. So, believe it, these fibs will tell the future. They will tell the future. It's up to you to believe in them. And just real quick, I'm not going to go off on a big tangent. I'm not here to demote or put down or say bad things about any other technical indicator or any other kind of tool that's used for charting purposes. All right. The reason why I'm not going to put them down, because I too, all right, believe me, I've used them. I have a collection of them. They're there for everybody to use. All right. Believe me, it goes on and on. This is just one. All right. Believe me, this chart can look like God knows what. And these tools are good if you know how to use them. And believe me, I've invested time to get to know how to use them, interpret them, translate them in relationship to price. All right. However, this is the closest you're going to get to the Holy Grail. I hear this expression going around, keep it simple. When I hear that, you know what I say? Ha ha! I'm serious. I mean, this is the definition of keeping it simple. This is the most overlooked tool that you have. And again, you have risk, reward, risk, reward, entries and exits. A holy grail all in one tool. All right, enough. Let's a little bit more and then we are done. This anchor right here, from low, see if I got it right. Yes, from these lows, from February, if I'm not mistaken. Let's make sure I am right. Let's use this tool. February, early February lows to the high of pretty much February. All right, measure from those 2 points. It give you, do you remember this? 2028. I'm not sure why that looks, I remember 2028. Oh yeah, that's right. Yeah, 2029, that's 29's printed. That was a line in the sand. Right, that's a major one. Once that breaks, that just confirms that we top these 29s. That's the confirmation that will say the top is in. right? However, we did trade the long once already. We traded it down in March, and those has profit targets up at the 52s. So let's just say if this level holds up, if this level holds up, these 84s don't trade, we can make our way up into 36s. From 36s, buy pullbacks again. Those lead up into 49s, and that's how you make your story to get up into 52s. So we'll see. We'll see. It's yet to be seen, and that's where we are at for the E-minis. June 25th, 2:30 in the morning. Get ready for the Euro Open.